Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you, as always, for clicking and giving us a few minutes of your time. We're going to unpack really 2 points under the same market umbrella, which is really taking stock of where we're seeing the performance and what kind of stocks we're seeing doing well and which ones not so well. So we're going to start with this chart of really looking at the various different types of indices. And though we've had kind of this same trend of the largest stocks doing well, it's really just taken on a whole new level here in the past couple of weeks. And we could see that the divergence has turned pretty stark. So what we're looking at here are several different indices. You've got your mega caps, so your largest of the large in the red. That's where the strongest performance has been. Very startling if you look at the blue line. So there is your small caps have actually gone negative year to date. So even though we see large caps, so the S&P 500 at a plus 14.5%, it's been very, very, very narrow and very, very few stocks, and the smaller ones have dramatically underperformed. In fact, the green line, which we think is really one of the healthier way to look at stock indices, that is the S&P 500 equal weighted. So rather than your traditional large cap where the largest stocks get the largest vote, the equal weight just simply says every single stock has the same influence on the index, and that is just barely positive versus the 14.5% move by the S&P 500. So very telling, and really Andrew is going to give more details that I think are along the same vein, which is just this divergence, which is split open in the past couple weeks.
Thank you, Adam. One of the things that I spend most of my time looking at, and I think has one of the largest benefits when doing analysis on the broad market, is first stepping back and remembering when we talk about an index, it really is a index of individual stocks, and it's driven by the performance of those individual stocks. The chart that Adam just went over did a great job of showing the influence of size and what the largest stocks can have such a massive influence on the performance. Whereas, like he showed with the equal weight, when you give everyone the same vote, the same say as what I was talking about, the performance has been fairly flat, up just a couple percent year to date. When we look under the hood, and we do this a lot in the market carver, we do this every week in the allocation meeting because we think it's that important. Looking under the hood of the market and seeing how are the individual stocks performing. What we want to see confirming an uptrend is a lot of stocks, individual stocks, rising and making new highs. When we see the index hit a new 52-week high, we want to see a lot of individual stocks doing the same. That gives us confidence that we have a lot of those stocks that are casting their vote, to use Adam's terminology, they're all voting in the same direction, regardless of their size. When we start to see them begin to vote against the market, meaning they start going down, that's where we start to get pause and we start to recognize that a lot of downturns in the market start this way. Now, it's important before we look at the chart to remember that just because we start seeing these divergences and what I'm going to unpack with what the market's doing today doesn't mean we are required to see some major market decline. These can be resolved in different ways. Unfortunately, we often do see them resolve with the market begin to move lower. So what we're looking at this chart is the market over the last roughly year. We saw last year, if you look kind of in towards the middle of the chart around September, October timeframe, we saw the market saw a 10% decline. What that started with was we started seeing less and less stocks making new highs. When the market finally bottomed in October, we can see that we started seeing expansion in new highs. You can see on that the 52-week high in the red numbers there that the numbers started going higher. A lot of stocks began to recover, actually even ahead of what the index was doing. Individual stocks were showing really strong performance, and that was a big sign that the market was starting to see that recovery that we really want to see as those uptrends begin to get really healthy. We fast forward to the first part of this year, and we can see we still saw a lot of 52-week highs. We saw a lot of stocks continuing to march higher, confirming what we are seeing in the overall index. Now let's look at the far right side of this chart. Looking across time frames from short-term 20 days, 3 months, 6 months, all the way up to 1 year, we're starting to see less and less stocks making new highs across these time frames. And this is happening while the index itself is continuing to march higher. Something we've talked a lot about in this market carver is really the importance of those mega caps, the FANG names, Magnificent Seven. We're now even just calling them the Magnificent Three because it's just just a small number that really are driving this market today. But when we look under the hood, the individual stocks, and we can see it from both Adam's chart and mine, is that we have less stocks making new highs On Adam's chart, we saw the performance for the average stock has been fairly lackluster, and these combined don't paint the prettiest picture for the stock market. Now, again, what we do with that is we identify an environment for the market. We then start looking for confirmation from the indices, from leadership, from all these different pieces of data that we can unpack and start seeing, does the market begin to respond to this type of data? And when it does, that's when we start to make changes within portfolios. That's when, as asset managers working for you, we begin to make and start turning those levers and making changes. But we want to start seeing that confirmation to know that this data is being recognized by the market itself. But so right now, not the best sign, not the most bullish data that we would prefer to have, like we saw earlier in the year. Now we're starting to look for, does the market begin to recognize the tumultuous situation going on below the hood?
Yeah. Very well unpacked there, Andrew, as always. So thank you. Thank you to all of you for giving us your time here. As always, give you a reminder, if we can be of service, give us a call, please, 800-928-4001, or scan the QR code and book it electronically. Thanks. Have a great weekend.